Good morning. Just doing a little market update because I was unfortunately not able to do the one yesterday. In any case, looking at some local stuff here for the overall data points coming out, we have initial jobless claims and PPI, both major driving factors for next Wednesday's FOMC interest rate decision. So watch this. These are at 1 hour before the New York Stock Exchange opens. And next week, of course, the number one thing we care about, the economic projections, the statement, the interest rate decision, the press conference. So it's going to be a big, big day on Wednesday, kind of determining not only the end of Q1, but the outlook going into Q2. So, looking at the long shorts for Bitcoin specifically, we have been coming down a little bit, but we're rising again now as we are breaking down, at least locally. In general, the higher time frame is still technically down, and we're still more long than short, which isn't the best driving factor for some type of bounce. Effectively, we're underside retesting a very high time frame structure. Looking over the funding rates are relatively good, low and neutral. BitMEX still being the big outlier, and Bybit on token margin still showing quite nice negatives for some potential upside and continuation. But in general, it's good but not great for an upside drive. Alts, on the other hand, in general, very, very negative across the board for the most part because they've been absolutely obliterated and the majority of the long order books for them have been destroyed. So, going into like the liquidations as an example, local stuff, yep, we're just kind of in a flat. We've got some good things building down lower at 76 and 77K in the last 48 hours. A little bit of a higher time frame outlook looking at the 2 week here. Just let me load real quick. We still have that nice area above us, as well as not a whole lot holding us to the downside. So the big things here are that 87, 88K zone above us is actually still attractive. Even here to the upside, we are building quite a bit of shorts as we're squeezing into 85, call it 85.5, 85.6. The real levels we care about in this area are up near 86.5. This is really gaining the weekend range high. That's going to be really critical for some localized gain. We've seen a little bit of breakdown here locally. So, and the higher time frame is if we start doing some failures here, we should come back down to test some of the lows near 81. And if we lose that, then we have to come all the way back down. And realistically, we could easily come back and make new lows as there is still liquidations far below us. The big thing here is, are we going to see a gain of where we're rejecting? We're rejecting 84 here locally. That needs to be a localized gain to get us up to test the weekend low structure. And then we have to gain the weekend low structure to test higher. And we'll go through more of that on the chart. So in general, good pockets still above us, good pockets still, further above us, but we are getting into some local stuff. So we hold the higher lows, we might get one little pop to the upside, but we still have downside on the overall high time frame trend. On the liquidity side here, just looking, in the low time frames, we are getting some nice big block orders stepping in to push price up higher. We're coming into a nice big area here. We've technically done a little bit of failures lower time frame. There's some stuff starting to stack in the last, I don't know, 12 hours or so, 8 hours or so above us, some pretty large scale orders to potentially force price to go lower. If we want to see some gains, we need to see solid moves into 84 and start ripping through some of this liquidity above us. But it looks like if we do start coming back up to test the highs, we might get some pressure back down. So effectively what you're looking for is any new lows off of what we just did at 82.5, you're probably looking to come back down towards 80K. But realistically, you're in still a bit of a flat and you're at high time frame resistance. Gain of 84 is really the key to start testing 85.5 and higher. So looking across the board over to the actual chart itself, what do we have? So I think the first thing is to look at the higher time frame real quick. Look at the daily, right? The key here is that we've been failing ranges and going lower, right? Failing a range, which is, we can argue where that exactly is, but call this a range, call this a range, call this a range. We're basically failing ranges, right, and going lower. So as long as we're failing these range structures to go lower, we have continuation to the downside. On the daily time frame, are we gaining anything back? No. We're underside rejecting March. March is the key up here at 84.4 to really gain on a high time frame. That is the goal on the daily close. Get at 84.4 close or higher to start regaining this kind of structure, which should take us straight to 88K, which is around about mid-range of this structure. Excuse me. So until that changes, the higher time frame is still down. Weekly outlook as well. Worst weekly close ever. We're now doing underside retest. We haven't regained anything. We want to get back above and give us some priority to start at least retesting underside structure up towards 90K plus. On the low time frame, the actionables here, like I said, we had a big nice pop up. We've tested March bearishly, albeit, we've tested albeit bearishly. if we do start breaking down, we want to see some local losses like the previous daily open, getting back below the local lows, and then starting to do some retests, potentially back down towards 80K and potentially lower. So again, the key here to the structure is starting to regain March to retest this here. The big thing is this structure, this weekend price action structure. That's where we kind of failed from off of this high. Yes, this low is holding us down still, absolutely, but that'll be the next spot. Why? Because we know up here, around about 88K to 87K, there's a ton of short liquidity. Lots and lots of short liquidation, excuse me. So if we do get above this stuff, we might just get a rip back up into the zone. We do also have a CME gap in this area from the weekend still in place around about 86.2. So there is still a reason to go back higher if we gain March. That should be your target. And then if we go higher than this, the next target should be around 87, 88K. Until that happens, you're at resistance. If you do see some localized failures, watch for some breakdowns that start breaking you to retest lows and retest key levels as we come back down to test. Again, we're not out of the woods yet by any means. We're still underside retesting on higher time frames. And even on the low time frames, it's starting to round top a little bit. It's not really gaining stuff back. So two things that we'll look for here are localized failures. Like if we just get some localized failures to break us back down, and then we start retesting stuff, and all of a sudden we're kind of like round topping this in the local structure. The other thing to look for is actually a rip through, a retest, and then a regain. And we start actually gaining levels to go higher. That's not going to be sustainable, but it's definitely going to be looking better as a higher time frame structure to regain March to potentially attack higher in general. And then the other thing to look for is like for some extreme downside is if we get a real big pop above, followed by a real big close back underneath, like big wick that breaks the level but doesn't gain anything, it still closes underneath. Always watch out for those liquidation grabs before we have reversals. Watch the closes. If you have a big wick to the upside followed by a reversal, it's usually like the start of something really big to come back down and make new lows. So keep an eye on it. It looks kind of optimistic in the overall trend, lower time frame. It looks okay, but it's still failing to make new highs. It's now technically made a lower high off of this high. So now we're looking for a potential new low to come back down and retest stuff. So key levels, like I said, March at 84.4, that gain on a high time frame, like 4 hours, especially daily. Daily closes is what we need. And then if we do have some further breakdowns, we have the weekly open at 80.8, and then we have 78.5, which is the structure we want to see held. Any new lows under this, we make new lows overall, and probably do 76 and then 74 pretty quickly, where we start looking for bottoming structure. But until that happens, priority still down, higher time frame. Wait for changes in the overall market. It's still quite bearish and funny. If we do start gaining stuff, we want to see two things. We want to see retail traders and long short ratios coming down, so people aggressively trying to short it, which means they're psychologically broken. And we want to see nice regains of previously lost structure at 86.5 until we can start attacking up towards the yearly open. So that's that. Take it easy and catch you tomorrow.